there was just pretty strong research to say that they sellers sell for less money by doing that. But in their mind, it's like, hey, I don't have to pay a broker or an advisor. So
That's interesting because I did two smaller deals. They did not have a broker, and I got sweetheart deals because I learned a ton working with you. And like, there's still so much to learn in deals. You could structure them a million different
yeah,
ways.
yeah,
And I think it's just penny wise, dollar foolish. Like, hey, I'll save 10% on the back end, but it's like, okay, but if you get a 1x purchase price and you save, 100 grand, cool, but you could have got 3x.
So Kevin, like a champion, thanks for coming on.
Yeah, thanks for having me.
It's this is an episode I was really excited about specifically because we got a chance to do a deal together, and it was a transaction like many I think was challenging in ways, but I think it also I feel like we were able to establish like a mutual trust right away
For sure.
and just work through the details and get it done. And so for me, that was really fun. And obviously, you're still here, talking to me 2 years later.
Yeah.
So it couldn't have been too bad on your end. But
No.
just starting off, you spent years preparing for a career in wealth management.
Yep.
You did undergraduate work and graduated from Johnson and Wales.
Yep.
Major in finance, minor in entrepreneurship. Yep. Then you get out, and for those who don't know, Series 7, 66, life and health, and certified financial planning, all licenses and designations you got, which required a tremendous amount of time to get done. So you go out in the field. Help me understand at what point you said, you know what, I don't want to do this anymore. I'm going to go out and buy a business, or which ended up being a plumbing business. Want to hear that story?
Yeah. So in college, I started with entrepreneurship as the minor, and I loved it. So my intention was to kind of come out and start my own thing, whatever it was. I just liked business. And then I kind of felt like, I got the gist of it, and I was like, hey, let me learn about this finance thing. This is always interesting, stocks and stuff. Let me learn about that. And then I started thinking like, hey, maybe I could just go in the finance route and start my own finance company. I was like, cool. So graduated, and I was like, hey, let me just get some licenses, and started with an insurance company. Got some sales chops going and just kept getting licensed as I went. 5 years in, got my CFP, was making good money. I liked the sales side of it, business development side of it. Worked in New York, opened an office in California. Then I ended up in Boca to open an office here. And it was good. It was just boring after a while because it just kills your entrepreneurial spirit. Because finance, you're just regulated by so many entities. Like, for example, LinkedIn, you have to shut off your testimonials. You can't have people give you testimonials. You can't really have Google reviews per se. So it's really just schmoozing and stuff like that, which I'm good at, but it just kind of, you're very limited. It's almost like a popularity contest. And I learned a lot, and it was just kind of the same old thing, and I kind of realized I was at scale, because once you get 80-ish clients that you're working with managing their wealth, you can't really go any further than that unless you hire people below. So I considered, starting my own finance company, and I was like, well, my passion's not really there. It's still kind of boring. So at some point I was like, I thought about it for years. And then when I was in Boca running the office here, I was just so bored, and like realized I was like miserable. I just hated going to work. Even though I was good at it, I had a good relationship with my customers. And I realized I was either going to start a franchise, which I almost pulled the trigger on, start something from scratch, but there was too much risk because I had a newborn daughter. And I was like, well, let me go look at buying a business. And I realized I didn't really care what business it was. I just kind of liked the game of business. And that's where I kind of stumbled upon the home services space. I got in touch with a consultant, kind of like a partnership thing, to train me how to look for businesses to buy. And that's when we honed on that, investment thesis, home services, which, as you know, is very popular right now with private equity groups and stuff. So it seems like it was a good move. And started looking at a bunch of businesses. So I think Kyle Plumbing was the 20th business I looked at when I met you. I had an LOI in one other flooring company that went bust pretty quickly. The numbers weren't there. And the motivation was I just want to be my own boss. I kind of figured, hey, if I'm 80 years old and I look back, what would I regret? And the only thing I regret was not doing something business related versus taking the safe route even though I was successful in it, in my opinion, I just felt like this is something I had to do, I wanted to do, and I ended up meeting you.
That's great. I love that. And so, especially the part about looking back and saying, just having that perspective to know that you only live once, and like that, it
Yeah.
was a pivotal time to do it, and pretty bold to do it, like you said, with a newborn. And I've got a couple kids myself, and I know that plays into like those risk versus reward decisions, right? Was there anything? I know a lot of people. Somebody like you is often categorized as what we would call like a search funder, somebody that's looking to buy and operate a business versus a strategic or private equity financial buyer. Were there any? I know there's a popular book out there called Buy Then Build. So I didn't know if you were aware of that book or there was some other. What was it that turned you from, hey, I want to start a business, to actually I can buy an existing business and have the immediate cash flow and stuff? Like, was that something you came to on your own, or was there somebody turn your sort of thought that way?
I think just doing some diligence and starting my own, doing a franchise, like starting your own. I didn't have the time to do it, because that just takes a lot of time, and I just didn't
Ramp up period.
Yeah,
Brutal.
and I also didn't know anything. I didn't know anything about plumbing. Now I'm 2 years in. I'm pretty dangerous, I think, at least.
Yeah.
I don't do any of the plumbing work, but I can run it from the back end. A franchise to me just had too many rules, and I knew I'd be bored and annoyed with that. Like buying specific vendors, certain marketing, geographical expansion limitations, and stuff. So I figured you buy a business, you got an existing client base, and for this trades, specifically, this business had people in place to run the business, and I can just, uplift it pretty quickly with technology and just my own thoughts that I would want to add to it to bring it up to a modern time, because it was a 30-year-old business, very successful business, but it was still paper, print, different types of things where I thought there were some good instant wins to be able to implement pretty quickly.
Yeah, I mean, you felt like you could put your sort of fingerprints on it and make it your own. And so I love I'm always keenly fascinated by what's the play, right? Like, what are you bringing to the table? Clearly, it's not an expertise in plumbing, not that you couldn't learn it over time. I think we can learn pretty much everything over time, but just like that thesis that you talked about earlier, that there's a lot of different ways to attack and look at it. But I'm really interested about that part and dig into what are those instant wins that you felt like that did you go after, and did you achieve them?
Yes. And I just thought there was transferable skills, like sales skills. I did manage people. I did start things from the ground up in new endeavors in finance. But one immediate win was really adding ServiceTitan, which is a software CRM program for field management, right? So dispatch, invoice, take payments, basically, pricing estimates right in the field to be able to do things quickly, which was a bear to get off the ground, but now it's up and running and it's just great. I mean, you can send automatic text messages for, hey, we're on the way, dispatcher's here, send a picture. So just efficiencies built in for speed and professionalism, whereas before it was, they had a printer bolted into the front seat of their truck and a laptop as well, and they would go back to their truck and type it up and things of that. Like, that's just a lot of time, a lot of inefficiencies. Plus, it's just easy to, your printer dies, you run out of ink, what are you going to do? You can't charge the customer. Right. So that was one instant win. Took a little while I had to get the buy-in from the team. Like 2 months in, we decided to make a move, and everyone was on board, and we built it. So that was a huge win. There wasn't really any marketing of any sort going on. There was some minor website stuff, a little bit of SEO, minor. It wasn't. I wouldn't even really categorize it as marketing. So my thought was, hey, if you're successful now, you got a nice client base. If we just actually strap on some better marketing here, it should be more of a rocket ship. So we did that. Hired a different marketing agency, new website, new logo, rewrapped all the trucks. So he had a little bit of a seasoned logo. So we kept the name, but we just kind of upfitted the trucks better. He had big, bulky box trucks that were just gas guzzlers. So I just phased those out and got new Fords. The guys didn't have a lot of higher end tools on their trucks, just a lot of parts. So I supplied them with these higher end tools again for efficiency. So it's
Yeah.
like why come back to get that from the warehouse when you can have it in your truck? So it's a bit of an investment for sure, but it pays off pretty quickly once the guys can do the jobs pretty fast. Plus they can bill and charge right then and there. So those are some immediate wins that I implemented pretty quickly. Plus compensation, a lot of the guys were getting paid hourly with some minor spiffs like $15 if you sell this faucet, $25 if you sell that faucet. So I basically gave everyone a raise instantly. And then I went through a few different commission type structures, and we all decided together as a team which one we were going to go with. And they were all hesitant, but then week 1, week 2, they made more money than they ever made. And we never looked back. So now we're in a place where we're attracting the higher end plumbers, 3, 4, 5 years experience at a minimum, but they like the culture, they like the speed, the technology, how the business is ran, but they like the pay too. So it's a competitive industry, but the good ones want to get paid well, and they kind of want, I just looked at it from a sales perspective. I just wanted all my tools available and just let me go, So I just try to make it as easy as possible for them to succeed, and we handle everything else behind the scenes.
Yeah, I love that. You build the processes and provided the technology and the tools they need. I want to back up a little bit. This is one of the parts that I found interesting when we were going through the process. You went through a company called Aquira in Portland that was what I would essentially call an incubator, right? And so my understanding is that you came in and they gave you a lot of the tools and helped guide you in the right direction into buying a business, buying a home service business, evaluating, diligence, financing it, integrating it post-closing. Would love to hear a little bit more about how you found that process, how you found them, how you feel like they added value to the equation.
They're probably the biggest advocate I had during this entire process, and even still today. So as I was doing the initial diligence of starting franchise, buying, I guess their algorithm found me. So on Google,
Oh, really?
their stuff started popping up on YouTube, Instagram and whatnot. So I had a few calls with them, but they didn't have too many testimonials. So I was a little hesitant, but they're really, really great group of guys. But I mean, yeah, they had I call it like a little mini MBA course in M&A that I think I went through in like 30 days or so, 30 to 60 days. It's at your own pace. You pay them a little bit of money. You have open access to their literature, their documentation, their education on pretty much every step of the process and honing in on investment thesis. And that's who helped me figure out, hey, the home services space is probably key for what you want to look for. And that's what they were interested in looking at too. And then they also had a weekly phone call, like on Zoom. So everyone's in the same group, whether you just started or you're about to close on a deal. So it was a really good group of like 200-300 people that were in the same arena around the country. And it was like a really good way to speed up your learning curve. Like, hey, just all different phases of what people were dealing with. And you had an open forum to ask questions, hear other people's situations. And I had a coach that I had access to pretty much once a week, but also on Slack and text as well. So they pretty much just educated you on the entire process, but then they were there to help guide you along the way. And then it was almost like a little mini Shark Tank where they had like an investment committee. So once they coached you through it, it was very much, you got to kind of take the bull by the horns. They're not going to do it for you. But if you listen to what they were saying, you found a deal, you can put together a quick slide deck that they give you the template. It's like, hey, fill in the gaps. And as long as your coach kind of signs off on it, says, yeah, this looks decent, set up a meeting with the investment committee, you go through it and they try to poke holes in it. Not like in an aggressive way. It was like very nice and helpful.
Make sure you're looking at it.
Right. Like, hey, that's a good idea. That makes sense. Ask the questions here. I would like to see more there. And just kind of give you hey, you're in the right direction, or like I would walk away from this deal. So it was very reassuring because it's, a lot of people can learn those skills, but just having that, brain bank of people to help bounce ideas off of was huge. And that was pre-deal. And then post-deal, they also had some other add-ons with consultancy that you can kind of tack on, which was also helpful because, everyone's excited. And then the day of closing, I remember it's like, great, it's very exciting. But then the next day you got to introduce yourself to all these people. And it's like, hey, I'm the new owner and I don't, I'm not a plumber. right? So I had 2 guys with me there making the introductions, and we got to talk to everybody within 2 days, have one-on-ones, but they were with me for 9 months, kind of just prioritizing, hey, here's the roadmap, here's the things you should prioritize, financials, let's clean up your P&L to make sure we're looking at that properly. When should you look at marketing? Who should you hire first? All like basically a roadmap and just a constant resource to call or text if you had a question on how things are going. So it was a nice way to just have that like shoulder to cry on, sort of, to be like, hey, what do I do in this scenario? And they just help you versus just going at it alone, which I thought was great.
That's an amazing program. Yeah. I mean, education, coaching, vetting, all that. Did they help with arranging financing or structuring your capital stack?
Yep. So they help you with how to figure out the financing. They actually co-invested in my deal. That's not a requirement. At the time that I was a member, it just started, and they actually liked my deal. So they said, hey, we'll co-invest and help, whether you want to do SBA or other types of financing, it's your call. And then you just have a conversation about how much you need, how much you want them to be, how much percentage you want them to own. But I'm in the driver's seat the whole way. They're more of a silent partner as an investor. So that was also nerve-wracking a little bit, because I assumed that they were going to be like really up my ass, like asking me for things left and right. And they haven't. They've been great. So even to this day, even people that aren't like the fund manager, he's a great resource as we do other deals, just restructuring things from a tax standpoint. And the CEO, we talk once a month now, just for free, like, because we hit it off. We're buddies. We meet every time he comes to town, and we just enjoy catching up, and we exchange ideas on like what's working with some of his portfolio companies, what I'm doing. He does some cool stuff with AI recently, so we just exchange ideas and see like, what's working with some other companies, and it's just a really good conversation.
Are you incorporating AI into what you're doing yet?
I am, yeah.
And what does that look like?
So I think it's in a couple ways. I use a company called Podium, which it's really a text platform, phone platform. So for example, all our phones go through there. It's like voice over IP. So all the phone systems go to the people's cell phones, right? It's all recorded. It's all tracked into ServiceTitan, so it syncs together. If we miss a call, you get an automatic AI text that says like, hey, it's Kyle Plumbing. We saw the call dropped. How can we help? There's a chatbot feature on the website. So and it also sends the reviews out. There's an AI response right away, and everyone can see everything at the same time. So it's a really quick, efficient way, like speed to lead kind of thing. So if a customer wants to text in, like the AI will jump in if we're not there, and we train the AI to specifically answer certain questions. So there's like a bank of like 100 Q&A questions for you to start with, and then you can continue to train it as you go. Like you can literally click thumbs up, that's a great response, or thumbs down and says like, well, what do you want me to say? And it's not like so structured where it's like, say this specific word. It's like, say something like this. So it's more like of a normal conversation. So I've been very impressed with that. But just from a front end, like lead standpoint or customer conversation standpoint, it's great. And if like the AI gets in trouble, like they're not sure how to answer a specific question, an immediate alert goes out to 3 of my girls, and any one of them can just grab it and they can just respond right away. Or you can basically do whatever you want. You could say, hey, if this kind of question comes up, send a message to me. If this happens, send it to the team. So that's one version of AI where it's worked out really well. And we're continuing to build upon that in ServiceTitan to kind of just be quicker with our leads and categorize things properly.
That's amazing. So it's mainly front end customer service, sales inquiries, stuff like that right now.
It's just all communication via text, and it records and also transcribes conversations, and then it just links that to ServiceTitan too. So we don't really miss anything. And we respond super fast, which is huge. That's also good with Google marketing too, because when a review comes in, it responds right away. And it's a nice response. It's not a canned response. It's always something different, and it's always spot on so far. But again, you can train it. Yeah. But Google wants you to respond to reviews in 24 hours. I think if you look on Google, it says like common response time, like a few minutes. That's good.
So if I leave a positive review, thank you very much, Wes. And if it's negative, I'm sorry, we want to make this right. Or
if it's a 4 or 5, you can customize it. But if it's 4 or 5 star review, it'll send out automatically. If it's something less, the team gets notified, and then we look into it so we can customize it, reach out to the customer, see what's going on, because that's a little bit more sensitive. We
Yeah.
want to look into it. I'll still respond within 24 hours, if not same day, but I want to look into it, see what's going on. Why is the customer upset? What happened? And we try to, usually we have a very good success rate of, like the other day, I had a 1-star review, looked into it, called her, said, hey, sorry about that. New tech, didn't understand the process. I'm going to refund your $300. Sorry about that. She changed it to a 5-star review, referred me to a property management company. Like, that's great, but like I knew, so I saw right away, I called her, she's super appreciative that the owner called her, and we got it handled within 24 hours, 1-star to 5-star and a referral. And this, we just saved that customer and we got another commercial customer out of it. So that's all.
That is amazing. That is, I mean, what a like way to flip the script from, from the worst to the best scenario. So Kevin, I want to go back earlier. You said that Kyle was the 20th company that you saw. Curious if you interacted with other advisors or brokers. I mean, I'm sure you did. What that experience was like, and we'll drill down a little bit further, but just generally in the sort of atmosphere of, M&A, what was your experience there?
Extremely underwhelmed with the quality of the brokers, the quality. I would say out of 20 deals, you and one other broker I was impressed with. And it's not even really about being impressed. I was just severely underwhelmed with the quality. For example, the follow-up time, just the lack of knowledge within the business that they're trying to sell itself, like really weren't getting a lot of details. A lot of them were kind of, pushing for you to sign an LOI without even getting details, very hesitant. Like, you sign a confidentiality agreement, NDA, and then I'll usually ask for basic documents. Last 3 years income statement, last 3 years balance sheet, tax returns as a starting point. Some guys are like, oh no, I'm not sending you that yet. It's like, I need to see that before I commit to an LOI. And you can always back out of it, but I'm like,
Right.
well, why do I have to do that? So just kind of interesting with just kind of making it difficult to do business. Like they just kind of seemed like they just wanted to get signatures and show, hey, I got all these signatures, but it's like you're not really interested because you don't have enough information yet because the deck that they give you is usually kind of basic. There was the one company I put an LOI into, he was saying they had $1 million EBITDA. And I'm looking at the documents and I'm like, this isn't show. Once he finally sent me all this stuff, he was one of those guys that had me sign an LOI. They were like flat. Like when you do out, he was like negative. You do the add backs, he was like even. So I'm like, what's up? Am I missing something?
Yeah.
He had no answers. He said, oh, the corporate handles that, different part of the state. I was like, okay, can I get on the phone with them? Like, what's up? Because everything else looks good, but this is not jiving. 3-4 weeks, I had $1,500 of lawyer costs to look over the LOI. Yeah. Confirms the data is correct. And I'm like, how do you not, you're selling something at $1 million EBITDA and it's really zero. So that, just to give you an example.
Do you feel like that there are brokers like that are simply just trying to bring a buyer into the equation and then sort of put them together and let it hopefully work out?
Probably, but I honestly feel like it's a little bit incompetence. I think you get some people that, I don't know what the requirements are. I mean, you can speak to that, but I feel like you get some realtors that are selling, homes and oh, I could sell a house, I could sell a business. Very different dynamic, right? You need to know a lot of details, financials, cultural stuff, just totally different skill set, I think. And I think they're just getting over their skis. Yeah, I sell businesses, and it's like, you don't know what you're doing.
Yeah, I think that there's also a perception in the market amongst many business owners that all that brokers do is bring buyers. And in many cases that may be true. I think that a good broker or advisor or investment banker does a lot more than just bring a buyer. But there's that perception, and I think it's a lot because of brokers like that who are just bringing buyers and introducing them to the seller, and they'll just sit on the call or the Zoom or whatever and let them talk and just kind of hoping they figure out without, really having the deep financial knowledge and expertise to understand how EBITDA works and, taking 3 years plus financials and, understanding how the adjustments that are made and all of that stuff, that it's a science, right? I mean, you're trying to figure out what's the cash flow that the business is generating. And so stepping further down into that topic of, the businesses that you're seeing beyond the brokers, what are the common themes that you saw in the businesses that you passed on because we see that, I mean, roughly they'd say 80% of businesses that are on the market don't sell. So I'm just curious as to, are there common threads between the businesses that you passed on in terms of the flaws that were too difficult to overcome?
Yeah, I think it's a handful of things. The biggest red flag is like the data just doesn't line up, right? So deck looks good, at least at first glance. Ask for the financials, you get them, and you're like, this is way off. And even you're looking at the deck and say, it's stale data to an extent, because it might be like, hey, this was last year, and maybe you're looking at June of the following year, and they didn't update it yet, which is totally fine. But then you get those, you try to match up those numbers with that, and you're like, so then you kind of lose trust immediately. It's like, who's lying here, or is there just incompetence? So you get that kind of stuff, and I don't know, it just didn't really match up. But then sometimes the data did match up, and there could be other red flags that you just didn't see in the deck. Like you can look at tenure of employees, and you can just see there's a ton of turnover. And if you're somebody like me, or really anyone, if you're looking to buy a business, you kind of want it to stay the way it is because it's successful, at least to start. And if you can't rely on people to run the business because there's just so much turnover, it's usually a red flag of bad management at the top. Like what's going on? Like, is there a cultural issue there? So that could be one red flag. You can do further diligence on lawsuits. They might say no lawsuits pending. Next thing you know, there's a whole bunch of lawsuits that they've gone through are currently active. Or you ask for further data, like they say, hey, it's 90% service work, 10% construction, and it's totally swapped. So it's usually things like that kind of come up, and it's usually just not jiving with what's on the main deck. Things of that nature. Sometimes it just comes down to kind of the price is too high. I found a business I really liked, but they just had a massive piece of real estate, and they wanted to sell that with it, and the numbers just didn't work because most of the loan was going to pay off this building that was non-revenue generating. So sometimes it's like a good thing, like you uncover stuff that you didn't think about, or it wasn't really spelled out. And sometimes, more often than not, what I found looking at 20 of them was there was just red flags all over the place that and you just, because once you can't really go into the business before you buy it. I've asked everyone, like, and I think I did that with you, like, hey, can I stop by the office during the day and meet some guys? No, because you don't want to spook the employees. And I know that now as a business
It's hard, yeah.
right? So like I would always ask, and like, no. So I would, we'd go after hours and check some stuff out, but you're still making an educated guess on the business itself. So if you start to see things that don't make sense and you're like lacking trust, the last thing you want to do is buy the business, because it's like, well, if I'm identifying skeletons in the closet here that you don't have good answers for, what am I going to find when I actually close
Yeah,
the deal?
100%. It's we see a lot of commonalities in business. We pass on so many. I mean, for every 10 that come to us interested in selling, I would say we pass on maybe 60 to 70%, just because it doesn't benefit anybody to go to market and sit there and not sell. It doesn't benefit us, doesn't benefit the seller, because we're always going to be asking them, hey, we need these updated documents and we need to have a call with this buyer. And so we try to be really upfront about that with them, and we dig in pretty deep before we even agree to take an assignment. And if it's not something that's saleable for whatever reason, like, we try to offer some guidance. Here's some things that you should work on. Here's some people you can talk to that are exit planners or value growth
Clean this up
advisors.
and then come back.
Get it ready, and then let's revisit every 6 months or a year. I had that phone call last week in my office. There was a large decline in sales because they lost a major client, which happens. I mean, so I just said, hey, love to sell your business. I think it's a great business, but I don't think for the value that you want now, I don't think you're going to get it. So let's retool your growth strategy, and let's revisit every 6 months and see. And if you're getting the hockey stick effect where you're going back north, I think now we've got a conversation. But so many of these businesses, unfortunately, have these fatal flaws. But even when they look to be ready and the value's right, like Kyle, I think it's super important to just recognize that there's no such thing as a perfect business. They all have flaws. Right. And so one of the things that we try to do is, when we're going out to market, we're dealing with buyers, and hopefully I did this with you. I can't remember the specific of all the conversations, but try to establish trust and say, hey, here's this business. Here's what we like about it. here's, the threats and the weaknesses, and just be right up front about it, because sometimes those threats or weaknesses are things that you can deal with and you know how to mitigate. And sometimes it's just a fatal flaw for you. And it's like, it's like a marriage. Like, hey, you want kids and she doesn't, like, that's a problem. And so I feel like that is something that too many of advisors and brokers don't do, is rather than trying to pretend like it's the brand new shiny car with no flaws. And so just curious if like what your experience was like in the marketplace, and if you felt like, you weren't always getting the real story.
Yeah, I mean that's a good example though too, because like your firm did a really great job at kind of hitting those key points of things that matter. I think other brokers don't see it as clearly as you do from the buyer's perspective, and they're just putting stuff together, or they're just highlighting the good stuff. They're not really like having one client that's maybe 80% of the
Right.
revenue.
You're going to find out anyway.
You're going to find it. So you might as well just save everyone some time and get it out there,
Right.
right? So, and those are questions I would always ask, but I think you kind of highlighted a lot of that stuff. Like here's the top 10 customer breakdown by percentage of revenue. And it's like, oh, okay, cool. That makes sense. Because you have a huge risk of new owner. That customer may say, hey, I just like the owner, I'm out.
Yeah.
And then you lose half your revenue. So that's a problem. So things like that. Or one guy, he had 60%. I looked at a landscaping company. He had 60% of his revenue was in cash. And I'm like, well, can you prove the cash is there?
Oh, yeah. Yeah, that's a big one.
And I'm like, so
How do I know that?
I'm buying it based upon your word that it's cash. Like
I just met you, by the way.
right? So things like that kind of pop up. So part of it, I think, is just natural diligence. But I think, a lot of these brokers did not really come at it in the right presentation of saying, here's what, and that changes, but it's like, here's some things that you should consider, and here's what's important. To your point, you turn away some deals where other people probably just take anything that comes to them, and they're just highlighting the good stuff, wasting everyone's time, trying to get a signature, trying to get a phone call saying, hey, I'm doing work here, try to hope that a deal comes together.
So I agree on all of that. And I think let's apply that practically with Kyle. Like, this was a business that had been around for 30 years. They had a lot of tenured employees. They had seemingly a pretty good brand and reputation. Roughly 2/3 of their business was residential maintenance and repair, which, for the viewers who don't know, that's the holy grail of the home services business, is the bread and butter, maintenance, repair. Your toilet breaks, like, it needs to be fixed. This is not new construction.
Yeah.
You can't put it off. And similar to their peers and electrical and in HVAC, like your AC breaks right now, like you're pounding the phone right now trying to figure it out.
Yeah, you want
somebody
to
fix it, right? Yeah. Whereas new construction, tract home, like that's obviously volatile, cyclical. So this business was roughly 1/3 construction. How has that gone for you?
It was actually the opposite. It was like 3/4 construction, 1/4 service work.
Hey, Kyle?
Yeah.
It was 2 years ago, Kevin.
I know. It was a lot of construction work, commercial, residential. It was just consistent because he had a great group of tight-knit contractors that he worked really well with. Mm-hmm. So like he just had a really good thing going on there. And then he just had the service work kind of covered the overhead and stuff. So I think it was like 1.35 million of service and like three and change million in construction work. Mm-hmm. Just depends how you kind of categorize that. So we're probably 30 to 60 days out from completely shutting down construction. So I've grown the service side from 1.3 to 5 million in 2 years to totally flip-flop and get out of construction. Construction is just not something that I like. The margins are lower, liability's higher, the cash flow is very long to get paid. And it just wasn't really ideal for me, where my strengths from my background on sales and technology and like speed, getting in and out efficiencies on the service side was kind of recognized immediately, and that's more fun for me. So that grew, and I did a couple other small acquisitions along the way on the service side. So we got to a comfortable place where it's like, cool, we're going to stop taking on new construction jobs and shut them down. But not to say construction's bad, I just think service is a better fit for me. And to your point, I think that's where like a lot of PE groups like it. I think the profit margins are higher, just easier work, less liability, higher margins. And, I know some guys that run really successful construction plumbing companies or construction like that, but I think running two, it was kind of like two businesses in one for me, not having the experience. And I felt like, even still as I'm shutting it down, construction's diverting a lot of time away from me focusing on the other stuff. So once that's fully gone, I'm excited to just focus 100% on the service maintenance side.
Well, I think that without a question, regardless of what your timing is on an exit plan, that's a huge value add.
Yeah.
Because the construction work is, like you said, I'm sure it's profitable, but just from a valuation standpoint, you're going to get a much higher multiple for the residential and the service work. And what was some of the other things about Kyle that drew you to it, that like led you across the finish line in terms of the value prop?
I really like the owner. I thought he was kind of like a no BS kind of guy. I think, I think he had a higher offer from a PE group, if I'm not mistaken.
True.
And he went with me because I was boots on the ground. He liked my story, even for a lesser value. And I think because initially he told me no, and he was going with that offer. And then once he figured out that no one was going to be on site, he thought the culture of his team was going to be diminished. And when he came back to me, that was huge, right? It's just kind of like a vibe. Like I said, it's kind of an educational guess, but we got along very well. And then that proved true throughout the negotiation process. We weren't, we negotiated very well. Like he had things that he was a stickler for, and so did I. We met in the middle. And even now we still talk because I rent the building from him. But, some guys, I felt like I could trust him. They had good reviews online, been around for 30 years. Some other owners that I met, they kind of just we didn't really vibe like that, like from a personality standpoint, or they didn't really seem like they had all the details of the business. And like maybe they were just kind of like it was running into the ground, or they were really kind of far removed from the culture. So the cultural piece, I like felt the culture walking around the office, meeting him, his wife, you two as an awesome broker, I must say. Like I hit it off with you. You were super knowledgeable, easy to talk to, quick, getting back and forth with things. Other people were just super slow, and it's like, are you motivated to sell your business or not? Like, it doesn't need to be right now, but the communication lines were there the whole time. So there was a lot of things like that. But the cultural piece, that's unique because it's just like a vibe, and you just on paper you can see with the tenure, and all those pieces kind of jived, and it seemed like there was really not many flags there.
You talk about your rapport with the seller, and to a degree with me, which is the feeling is mutual. I like to bring up an instance post-deal that I think is part of like sort of my philosophy of when you're finding the right buyer, finding the right seller, finding the right business. We can talk all about the attributes from the buyer side, what you want in a business. And I think from the seller side, we can talk about, who's offering the most money or whatever. But I feel like not enough sellers and buyers put stock in the people that they're dealing with. And so, and we can talk about also putting everything in writing. And we have clients many times talk about, we got to get some language in the contract. And I say, listen, that's important. We have attorneys that do that. And I certainly am not going to discourage that. However, some of this transaction that we're doing has to be a product of trust to a degree, because at the end of the day, the contract means something, and it is absolutely a necessary document to have. But at the same time, you don't want to have to go to that contract from a litigation perspective.
No.
Ever.
No.
Unless you absolutely
it's
have
like
to.
dire straits, last resort.
Last resort. And attorneys serve a very useful and important purpose. But I think most of the ones, especially the ones I deal with, would say you don't want to have to go litigate this if you can help it. So if you can work it out. So we had a situation in our deal where you called me one day and you said, hey, you've got a little issue. There's a breach of one of the reps and warranties, and it was unintentional, I'm sure. But essentially what we had was an undisclosed liability.
Correct.
And this was an accounting thing, right? And so do you remember kind of like exactly?
Yeah.
Why don't you just give me your recollection of that?
It was, I think it was twofold. One was, I think we pushed the closing date like a week, and it just with that construction side of it, like the accounts receivable literally changed like 60 to 80 grand differential from like one day, like in 1 week. So that was one thing, and we just never caught it because we just pushed the date, kept the numbers the same. So the money that we were holding as, you know, working capital that was agreed to was a little light. So that was one piece, and me and the owner worked it out.
Yeah.
You know, I think I said, just give me half. Let's just, and he was like, yes. So again, we just worked it out. The other was he took, I think it was 2 or 3 deposits for work to be done in the future, but he didn't account for that on the balance sheet. You're supposed to have like a negative like deposit, you know, work to be done.
It's a liability, right?
Yeah, and that was not on the statement because he would ask me like, well, why didn't you guys catch that in the quality of earnings? And I was like, because it wasn't on the balance sheet.
Right,
So,
right. But Q of E should have technically asked, do you take deposits on jobs? How do you book them?
correct,
Right.
exactly.
So
Either way. So
it doesn't
like,
make you wrong or
right.
your Q of E firm, but
right. Either way, and in both cases, you know, we all worked it out, and you know, the owner, there was no legal stuff, no liability stuff, and even if he had said sorry, like would I have sued him? No, probably not. Like it was like it's substantial dollars, 60, 80 grand, but like I think we could point blame at both sides, right? So that was just
Right.
part of how our group worked from the beginning. Like it's like, hey man, why don't we work something out here? And we just explained our sides and we worked it out, and that was it.
I remember I was like, give me a day or two to investigate this, and I'll get back to you. And I looked into it, and I was like, okay, so basically they're taking deposits on future jobs, and naturally a lot of businesses of this size, they don't follow GAAP accounting. It's very complicated. You can't afford a CFO for, you know, 6 figures a year to, you know, book it accordingly. So they booked it as a debit on cash and a credit on revenue.
Right.
Whereas you haven't earned that revenue yet, right?
Correct.
You should be crediting the liability.
Right. So I was going to start these jobs, and I'm like, all right, you got to pay. And they're like, no, we already paid like half. And I was like, whoa.
Yeah. So in you know, my client looked at me and said, hey, you know, I'm not an accounting guy. Tell me if we owe money or not. And I said,
yeah, he was a
"We
good
do."
guy, right?
And he said, okay, let's make it right. And I believe the way the contract read was it was an offset to the note. And you said, because that was the default, was you offset the note by that amount. And we kind of went back and said, well, you know, I've spent a lot of money on trucks and raises and stuff. It'd be nice.
I think he just gave me cash.
Right. And we negotiated some.
And I would have said yes
cash
to that too, but I was like, hey, I'd prefer to do this. And he's like, okay. Right.
And so
it worked out.
Yeah. But
well.
like you had 2 reasonable people, whereas all it would have taken is one of you to be unreasonable for that to end up in some sort of nasty legal dispute. And so I think that is a super important part of the deal that we did, and validated both of you to a degree that like you decided to do this deal. I mean, you weren't the highest bidder and he wasn't the perfect business, but you felt like you could just, you know, all the big rocks were there, right, for a good deal, and it made sense. And so,
yeah,
by the way, that's not.
And I didn't want it to be perfect, because if it was perfect, his multiple would have been higher, right?
Probably so. Probably so. Yeah. So, in the process that we ran, and you kind of alluded to this already, you know, we went to market. We spoke to many buyers. I explored many different sales channels and fielded offers and had meetings and stuff. Curious as to how that influenced you and how you structured your deal, because I'm pretty sure at one point there was a bid, and then it was, hey, I'm sorry, this was a good bid, you know, you're a good buyer, but you know, Kirk's going to go somewhere else, and you changed that. Do you feel like the deal heat and the competitive process influenced you to, you know, up your bid, make it stronger, you know?
Well, yeah, I think in general, I mean, my personal philosophy, because I'm never going to really go in at my highest bid. Not never, but usually I'm not going to go in my highest bid. So I went in at a reasonable bid, and I said, let's see what happens. They're like, hey, we got higher bids, or like we got another offer that like we're probably going to go with. And I was like, okay, counter offer. Here's my highest bid, and that's when I got Aquira on the phone, investment committee. Like same day, I was like, hey, emergency scenario. I really love this business. What's the max that I can reasonably go without being dumb to make sure this thing cash flows? Because I like everything about it. I don't think I'm, you know, like I think we did good diligence here. I don't think I'm missing anything. And I was like, this is where I think we should be. And they're like, okay, yeah, I think that's the highest you can go. And I was like, cool. So I submitted that bid. Still said no, but then he came back and took the bid. So ultimately, I had a max number in my mind and a max valuation, and that's what I went to. So I knew I was like, hey, if I get this, I'm not going to be uncomfortable with this valuation.
Yeah.
And if I don't get it, at least I know I put my best foot forward. So it was helpful, and that's just my philosophy. Usually, I mean, if I knew there was like a bunch of competition, a bunch of deals, for a deal I saw today, like would I go in at the highest bid? Maybe, I don't know. But like still, I still had a max. I think everyone's got a max number or
Yeah.
a seller's number, a minimum number in their mind, and I just hit that, you know, and thankfully it worked out. And I don't think if I went up, I would have gotten it.
I'm the same way. I think most people are. You never want to put your best offer out, and then you got nowhere to move,
Correct.
and then you're
And
going
if
to
you
kick
get it,
yourself.
cool, you save a couple shackles. Great.
Right, right, right.
You can't go down. You can always go up on the buyer side, you know. So
Yeah, exactly. We see a lot of. I mean, I estimate based on I read a lot about the industry, and with private businesses, not all of the data is out there, right? Because they don't have to disclose how much they sold for, or whatever. But based on what I've read, roughly half the businesses in the lower middle market, like 5 to 50 million, sell off market, no advisor, buyer directly to seller, no process, and you know, I there was just pretty strong research to say that they sellers sell for less money by doing that. But in their mind, it's like, hey, I don't have to pay a broker or an advisor. So
that's interesting because I did two smaller deals. They did not have a broker, and I got sweetheart deals because I learned a ton working with you. And like, there's still so much to learn in deals. You could structure them a million different ways.
yeah,
But from like a valuation standpoint, like I feel like I had got a decent handle on that. But without having a broker, I scooped up a couple smaller deals, and I think it's just penny wise, dollar foolish. Like, hey, I'll save 10% on the back end, but it's like, okay, but if you get a 1x purchase price and you save, you know, 100 grand, cool, but you could have got 3x.
yeah,
And when you look at the net difference, the value's there. Plus, I mean, the smaller ones, I think with any size, they should probably hire a broker because you guys can, to your earlier point, you can probably spot some things like, hey, if you kind of clean these items up in the next 12 months or so, like we can really get you some more money if they wanted to or not. But like, I think they did themselves a disservice. But it was in my benefit as a buyer to buy it without a broker. And
yeah.
it was quicker too because I didn't have any financing involved.
Yeah, and I mean, you have, even though you're not necessarily an institutional buyer or what have you, but like you have way more experience than most of these smaller sellers have in just acquiring businesses, right? Like you've done it before, you're in the space, so you know the numbers, and they're operating in a vacuum. They don't have the benefit.
Wait, they started a business, they got successful in their own right. Most of them, they started from scratch. They never bought a business, they never sold a business, so it's their first time. So they don't know what they don't know. And also what they knew 30 years ago or 20 years ago when they started the business is night and day difference today when they're going to sell it. So it's definitely, you know, as a buyer, they should hire a broker.
They very stubborn, very stubborn. I don't know if you ever heard of Enneagram. You know what Enneagram is? It's basically, it's like personality types, a way of understanding people, and it's, I would say, the opposite of a horoscope. Horoscope is you were born in a certain time that determines who you are by the alignment of stars. This is like, no, we've observed the world and all the people in the world, and now we've categorized all of them based on their 9 different personality types. And here's what your personality type, people like you are good at. Here's what you're typically like weaker at. And now that you know what you're weaker at, now you can work on it or mitigate it.
Or you can hire someone to do those things.
Exactly that too.
Just
right?
identify it, and then you can strategize. You know, you find the data, get the data right, and then you can come up with a variety of solutions that you can choose to opt into.
Instead of being weak at that, you hire somebody that's really good at that, and now all of a sudden, as a team, you're
great,
right? And
exactly.
so, Kevin, I wanted to jump back in, sort of some of the details of just sort of finish up on the actual acquisition that you did. And so you chose to acquire a plumbing company, which requires a license, a qualifying license, right? And so how did you think about that going in? Was that something that was an initial deterrent for you? Did you not think anything of it? Did you have contingency backup plans? Like how did you think through that?
I don't remember if I knew going in you needed a license because every state's different, but that was one of the questions. Like, hey, do you need a license? What is it? Who holds it? How does it work? So that was in Florida. You need a qualifier, a master plumber that has a Florida plumbing license, and you need them to sign off on permits and stuff like that. So he had his son-in-law who was in the business, who was the qualifier, who was happy to remain the qualifier and sign off on permits. And we spoke beforehand and we hit it off instantly. It was a no-brainer. He's like, I'm happy to continue to do that for you. And without that in Florida, you cannot operate.
Yeah.
So.
And this was roughly 2 years ago?
2 years, yeah.
Is it 2?
June 5th.
And he's still there?
Yeah.
Yeah. And so it's interesting that people do seem to put a lot of stock into that, but my experience, and I've done a number of transactions in healthcare too, where it's a similar type of thing where you need a qualifying license. And I'm like, for me, you're already, the business is already paying somebody. So if for some reason he were to leave, whether it was after closing or whatever, I would think there would be a taker out there. So I never really thought that much about it, but I'm just curious if it was something you were super concerned with.
From what I can tell, yes, because I think in Florida you have the ability to qualify up to 3 businesses.
Okay.
So I don't think you have to even be employed at all of them, but you have to sign the permits. You have to do your diligence, and if an issue comes up, you might have to talk to an inspector or a board or something like that. So, I think there is in Florida anyway. I think it's easier to find people, but it's also not just like, hey, can you let's work out an arrangement so I can sign your permits. It's like the good ones are like, well, let me make sure, like, I don't want to lose my license here. So like, are you pulling permits?
Yeah,
like, how's the quality of your crew? Are you running a solid business? Do you have ethical standards? Because like, yeah, while we can have a good relationship, if you're not pulling permits and doing terrible work, then they could lose their license and they can't qualify anybody.
Are we properly insured? Am I covered?
Correct.
If something, errors and emissions, things like that. Yeah, sure. Can you say what you would have done differently if you would have gone all the way back and done it again, if anything?
I mean, honestly, now what I know about construction, I probably wouldn't have bought the company, to be honest with you, because it was just, it was. I say that now, but ask me again in like every year, check in on me. I mean, we touch base every so often anyway, because I learned a ton from that, which actually helps me manage the service side better. And honestly, if it was just service, I probably would have wanted to get into construction anyway and probably learn the same thing. So
funny, yeah.
I just saw the explosive growth on the service side, and if I had just gone in to do that, it probably would have been even more explosive growth. So that's probably one thing. Because if I came across the same exact makeup of a company now, I would just say, hey, let me break off that service side. I'll take that. Otherwise, I don't want it. Like 100%, I wouldn't take on. I would take on a company that maybe had a small construction component, but still say like, hey, I'm shutting that down.
Yeah. Are you getting killed by the float?
Pretty much.
Yeah.
A lot of working capital that's really what crushed me, because you can make money in it, but I didn't realize you had that working capital. We did the diligence on it, so I think it was spot on what you needed, but like I also just didn't know what I didn't know. So I was taking a lot of that capital that I had sitting in the bank and investing in other things, and then things start to get kind of tight as those jobs take a little bit longer and lag.
And then you're filing liens and like just having to be bad guy all the time. And
yeah,
I mean, is there any way around that? I mean,
not really. I mean, it goes back to the litigation thing. Like, sue me. Okay?
Yeah.
And then you got to go down that. So it just depends, if it's worth it, if it's enough money, if you got the right documentation and they owe you money, cool. You can go do that. Spend 6 months to 18 months in litigation. That's a huge, I value time. So it's kind of like,
sure.
Hey, am I going to win this? I think so. There's no guarantee. How much time is this going to suck?
Even if you win.
Like, hey, you owe me 30 grand and I'm going to spend another 30 grand in lawyer fees that I might get back. But how much money am I wasting of my time focusing on this from the business? Probably not worth it. So it just depends on the situation. But you can file liens. But the only way so you have a lien on a property, you still have to file a case, go talk to a judge, and still kind of go through, you kind of still have to sue them to make them sell their property to then go pay you. So there's still a legal process. You can just file a lien and say, hey, cool, I'm going to foreclose on your house. You still have to go through legal procedure. So it's cool you can do that, but there's still a pain. It's like leverage. Some people get scared when you do it or you threaten it, but you still have a process to go through to get your money.
So on that note, what problems or challenges did you run into that you didn't foresee going in? I mean, this is kind of on the same subject, I guess.
I think the biggest struggle, and probably still is today, although I've gotten just better at it and more used to it, is, you know, going from like a white collar space with like a bunch of intellectual people, like having conversations with them, training them. A lot of those people kind of get things pretty quickly. And there's just, in where I came from in finance, there's just so many people you can hire behind that person if that person's not working out for whatever reason. Mm-hmm. Here, I find myself, as I'm trying to get plumbers to give them sales skills and get them out of their comfort zones is a challenge. I often find myself having to say things like 7 times before they get it, or it's just, I can have really great guys and they're just not really meeting the mark or expectations, but you're very limited with the pool that's behind them to go hire some more people. So you have to kind of be okay with people not exactly listening to everything you say and being like the perfect employee, which I don't even know if that exists, but like, yeah, there's not exactly a huge pool of qualified plumbers that you can just go out to and say, hey, I'm going to go these 2 guys and I've got 50 guys behind them I can make a phone call to. So you kind of have a different communication structure. In the beginning, it was really more trust. It's like, hey, I'm not a plumber, you are. And I'm a straight shooter. So I'm just like, hey, I'm here to run the business. You're here to do your job. And I'm just trying to make everyone's lives better. And we'll work together as a team. So that's cool. And I think they appreciate that. That took a little while in the beginning to, build that trust. But that was a challenge. Just kind of, also, I never managed that many people before. Now we're up to like, I think there was 23-ish when we started and probably about the same now. So just managing that many people and delegating to the right people to make sure that they're managing the right way and just communicating. People learn in different ways. So trying to figure out what resonates with different people and kind of having the patience to, figure that out and give them the tools that they need to figure it out, but then also not being shy to pull the plug when you've got a bad apple.
That was kind of part of my next question, really, was like, how did you win credibility with coming from an industry like finance? And if I'm hearing you, and coming into the trades, right? And like, I'm hearing you correctly, is just like you're sensing that everybody learns and like relates in different ways, and you kind of have to just feel it out.
How I built
just
trust.
Coming from such a different field.
I was just being honest. Like when I first came in, I'm like, I wasn't bringing up the subject of, hey, I have no plumbing experience day one, because I don't want to, everyone was nervous as it is. Do I have a job? Like, what's going to happen? Whatever. But even I just wear it on my sleeve. Contractors, clients, customers, property managers, new plumbers that I hire, existing. I just say, hey, like my skill sets are on the business side. Your skill sets are on the plumbing side. We all work together as a team. It's just being honest with them. And I think I've built good relationships with the team that I have for just being honest and a straight shooter. Like I don't mess around with their money. If there's a mistake, if there's an issue, if there's some miscommunication, and I'm just easy to get a hold of. I'm present. Everyone's got my cell phone numbers. They'll call me, text me if they got problems. So just being real with them.
Yeah.
I think no BS. I think that's really what built trust pretty quickly.
When I used to do the podcast on Zoom, I interviewed Keith and Andrew Koenig, who own City Furniture. And Andrew's a son, and when he got out of college from UF, it's one of my favorite stories that we had on here. He was like, he went and worked on the loading docks, and like not only on the loading docks, but like at the midnight shift for like a year or two, and earned the respect of his people. He's like, I'm not walking into a corner office in this building. Like I'm going to put in the hard work and the time, and I want to learn like how this works. Like I want to learn how you guys work, and maybe things that we can fix to make your job easier and more efficient and more comfortable. And that's like, I think that roll up your sleeves type approach like sounds simple and sounds like maybe even almost obvious, but I think it really goes a long way.
Yeah, I mean, I think another thing was just keeping the culture intact. So when there is a cancer somewhere and you get rid of those people as it comes up, and I had to do that. I had to remove somebody, and there was no one to back them up. No one knew their process. Warehouse manager. So I was the warehouse manager for about a month. And then it actually, I hated it, but I had to do it. and I think I gained some respect for it. But when I've had to do that in the business too, I've actually learned the process better and made it more efficient,
Yeah,
or at least
for
it actually
sure.
gives me comfort to know like, hey, if that happens again, I know how to do that job. I know how to do it. So like there's some people who are like, you should know every facet of your business so you can do it. I don't necessarily agree with that because I think you can just put good people in the right places, but you should have a backup plan. But it worked out in the sense that I learned about the business, but I think you do earn some respect for doing that. You know, you're not just firing somebody and saying like, hey, I need to move you over here now. Sorry, that's not your role. I'm going to do it.
Yeah, I think there's value in the message is, I think, hey, this is not beneath me. It's not always the best use of my time, but it's not beneath me. Like these jobs are all important. And um, I want to jump forward to, we talked about this earlier, but not far down the road, you decided to rebrand the company and change the logo and everything around. Like, walk me through what was the process and how you did that, but also what was the impetus behind it? What pushed you to do that?
It's actually a funny story. So I was keeping the name obviously because you have a lot of equity in the name. People know the name. So a buddy of mine I hired to redo the website, do some SEO stuff for me. He's like, hey, we should rebrand, and I was like, whoa, like I got to keep the name. He's like, no, we'll keep the name. Like it's just rebrand, and I was like, okay. And then like I think at like 2 a.m. I woke up, I saw a text message, and he had like this little green commando head as like the logo, and I was like, I hate it, and I'm like half asleep, like I don't care if you just do like a cartoon monkey with a wrench, like threw my phone, went to sleep, woke up, and there was a monkey with a wrench, and I was like, I love it, let's go with that. So like I wasn't even planning on doing it. I was just gonna rock the original logo, if you know, even though it was a little dated. And he came up with the whole color scheme and stuff, and I was like, great. And then we just took that and ran with it, and people love it.
So you had before, I, there was the baby with the wings on the
With like
clouds,
two
kind of a
wrenches.
heavenly sort of,
Yeah,
right?
yeah.
And which was kind of, I would think, it was kind of recognizable. I think
It
certainly
was.
more than a lot of your competitors, like who
It
had no
was.
brand whatsoever.
It was different. Yeah. And then, but then he also had the Kyle with like water logo. So I was kind of keeping that and getting rid of the babies with the
Yeah.
wrenches. It was kind of funny because it was like an ongoing joke because my plumbers would say like every time I pull up to someone's house or people stop us on the road, they're like, "What are you delivering diapers?" like, so yeah, I just changed it up and we just morphed it out over time because I wasn't going to rewrap all the trucks. It's very expensive, so we kind of just. So I think I have one truck left that we're getting rid of in the next week or so, and then it's all brand new.
Have you, Kevin, improved? Like, I know you've implemented a lot of technology, but like, do you have meaningful KPIs now that you didn't
Oh
have
yeah,
before?
yeah,
Yeah.
yeah. ServiceTitan's huge with that reporting KPIs, and it's kind of all around. You know, it's like I have my dashboard for the plumber KPIs, and then we have now our CSR KPIs as we're like really building out our lead sources, figuring out where they are, like what comes in, what's truly a lead. If it wasn't booked, why was it not booked? And if it's not a lead, you know, you kind of mark it that way. So it's kind of cool as long as it's done right. You can actually see like, hey, what's working in my marketing plan?
Yeah.
Like you can track what dollars are going to each marketing source. Is there training needed for them? Is there certain objections that are coming up that we need to be better at explaining so we can close these leads better? How to like whatever good data, you can make decisions from that data, right? So
Right.
just getting that clean without putting too much of a tremendous strain on the training process. They're trying to simplify the training process so that can be done right. And then the plumbers, you know, that's you can see like average ticket, you can see their efficiency rate, like if they sold a job, because we do flat rate pricing now. That was one huge change I did too. Instead of going to hourly time and material, it's flat rate. So it's just, hey, you have to change a toilet. You have low, medium, high level toilet, depending on which one you want. That's the price. So if we're there for 6 hours because we have an issue, you're not paying us more. And if we're done super quick, you're not paying less. It's just that's the price. But you can track all that stuff. So if they sell it for 2 hours and they take 4 hours, like are they slow? Did they misbid the job? Are they doing it quick? Are they overselling it? So you can see that. You can see the average revenue. You can see their closing percentage rate. So if someone has 14 calls and they close and they have like we track pretty consistently an 80% closing rate, which is great for the service techs.
Yeah.
So if they're like really out of whack, you can kind of see it. And I look at it as a training opportunity and you kind of dig in a little bit and talk to somebody about it. So we've got KPIs for days and we can run different reports for different things. What do we sell a ton of like water heaters, backflows, faucets, like what, and that could change depending on trends. But with good data, you can make good business decisions. Like, hey,
Yeah.
if we're not selling a lot of this, why are we promoting it? Or if we're selling a ton of that, let's promote that more. So we have KPIs all over the place.
What a drastic change, I think, from what you were, you came into. And um, let's talk about talent. The trades, obviously, from most of the businesses I see, aging workforce. And it's interesting, so many of the owners that I talk to that are in home services, electrical, HVAC, plumbing, pest control. Oh, we could grow so much. We turn down so much work because we don't have enough people. Like you should, as if that's a selling point. But everybody's in the same boat. Like, how do you attract talent?
Thankfully, I haven't really had an issue with that. I mean, we've had guys come and go. Most of the time, I let them go. I've had a pretty good. I haven't had too many people quit. Maybe 2 or 3 in the last
Yeah.
2 years, to be honest with you. But I think it's the culture, compensations. Obviously, it's kind of everything because you'll get some guys just care about money, so that's okay as long as you're doing things ethically. But you have a rich compensation package. I added health insurance recently, which is nice. Um, I think the guys like work. I've heard feedback from them like they like working for me because they see my vision. And since I'm not a plumber, like I do things differently. For example, a lot of plumbing organizations will say like, "Hey, you can't see your next call until you're done with this one, or you can see your next call only." To me, I think that's stupid because like my guys have jobs that they sold that they need to prepare for those jobs for the week.
Mm-hmm.
So I think the rationale for just seeing one is like, well, you don't want them to complain if those jobs get moved around. I'm like, I'm a straight shooter. Hey guys, you can see your stuff. Just don't complain too much back and forth, and we're in a good spot. And like, I took that away from them at one point, and they were miserable.
Oh,
So,
really?
so I think things like that, like I just try to do things in their best interest, not just the business's best interest from an operational efficiency standpoint. So I kind of look at it from both sides. So I've had good feedback from them on that. Um, I don't micromanage them at all. I train them. I provide technical training from outside vendors. I'm sending guys in a couple of weeks to go get 4 guys, which is going to take a huge hit to the business revenue for the week, but it's good ultimately for them and the business to go get trained on some advanced things. So I invest in them on that front too, and I treat them like adults. I have conversations with them. So I think I don't mess with their money. I've heard that a lot from different companies. Like
Oh, yeah. Yeah.
they promise them this, and then they make them do that, or they'll make them. They set them up for a 9 to 5 kind of work week, and then all of a sudden they're doing after hours work, mandatory for like months on end, or it's just usually the owner or the manager is not doing what they said in the beginning. So I'm just a straight shooter, full transparency from the get go, and I think that's worked out well. But from attracting new talent, I mean, it's the best plumbers I have is all from referrals and word of mouth. You can't, to me, if a plumber has a resume, he's not a good plumber, because the good ones will just pick up the phone and they can get a job in 2 seconds. So I built some decent contacts where I say, hey, do you know of anyone? I make a few phone calls, or the most 3 recent guys that I got were referrals from an existing plumber, and they love it here. So they're like, oh, you should come here. You should come here. You should come here. Like I have
Other guys.
yeah, and I have a guy now I just interviewed. I told him I can't hire you because I promised my guys I'm not going to just overhire and then they have limited jobs to make money. Like I'm
Yeah,
going to make
right.
sure we're smart about bringing on the next employee. So I actually have some people kind of as like a little pipeline of employees. So that's my take on it. We're not going on Indeed looking for plumbers or anything like that. It's usually just make a few phone calls, ask your guys. In the past, I've done, hey, here's a $5,000 bonus if you guys bring on a qualified technician. And I did that at the onset because nobody knew who I was and I needed to incentivize. I needed guys, but now it's just word of mouth, referrals. Oftentimes, my service manager or myself or my guys are getting calls asking if we're hiring, which is a good thing.
That is a good thing. You feels like you've built the culture, and now the word's kind of out, and it's sort of magnetic in
I
that
think so.
sense. And then you've developed an intuition as to the types of plumbers that you want and the types of people that you want, and
Correct.
Those that are, looking for the right things, quality and good at what they do versus those that are just looking for money and bouncing around all over the place. Like,
Yep.
yeah,
And if they are bouncing, I'll ask some questions like, tell me what went on here, because
yeah,
there could be a rational reason why. And you'll usually know in 2 weeks once you bring somebody on if they're
yeah.
true to their word or not.
So there's a buyer that's in your shoes like you were a couple of years ago because you looked at 20 different companies, which by the way, based on what I've seen, is pretty good that you were able to pull the trigger at 20 because I know it's tough out there for the search funders trying to find the right business and pull the trigger. And um, what you have some points of advice, like maybe 3 points that you could say now looking back that you've done it that might be helpful for a buyer.
Yeah, I would say one, focus on the stuff that matters. Don't get bogged down in the details. Like, what are your non-negotiables? If you find that, just hit it, because you're gonna. It's far and few between deals that you can find. So if you find those non-negotiables, don't focus. There's so many details that you should look at, but like, what are the key points that you need? Go for it. The other thing I would say is like, shit or get off the pot. Like, be ready to pull the trigger, because I
Yeah.
feel like you probably see this where people are like, no, I'm interested, and then they're really not sold on the fact of buying the business.
Yeah.
Like, you really just gotta pull the trigger and go.
Take the risk.
Take the
Right?
risk, yeah. And then don't get bogged down with asking a million questions. Like, it kind of goes back to the first point. Like, you don't need to spread a deal out over 6 to 12 months. Like, just have conversations quickly, focus on the stuff that matters, ask good questions, and leave the other stuff on the side, because you can just live in diligence for forever and ask questions. Because I talk to people that are looking to buy businesses and they're asking me like a million questions, and I'm like, why does any of this matter?
Yeah.
This does not matter.
Yeah. I feel like many of them are looking for reasons not to do a deal, more looking for reasons not to do a deal than to actually do it.
Right.
Like talking themselves out, analysis paralysis.
Yeah, paralysis by analysis. Exactly. Like, avoid that.
I get it. I just think that so many folks are there. There's a cognitive dissonance there with I want to own a business because I've seen successes. Perhaps it's been glamorized to a degree, but I'm just too risk averse, and they just can't reconcile that in their own minds, right? And like I was saying with one of my previous guests, Dave Black, who was an attorney, he's kind of like, I'm paraphrasing, but at some point you just need to take the risk. You can't document away all the risk in a sales contract, and you've got to just pull the trigger. And I think that if you look back over the course of history of successful people, they've all taken risks. Some of them crazy amounts of risk. And so I wish that, because I talk to buyers like you all day, every day that were, it's coming from similar shoes, career changes, and I can hear it in their voice and in their reasoning and their questioning that they just can't get there. And they're tired of the corporate world. And
I have those conversations all the time.
what's that?
I have those conversations all the time with
They
people.
just can't get there. They romanticize it, but they're just not. And maybe for some of them it's a process. Maybe for some of them it's, might take them a little time, but they'll get there. But a lot of them just don't. I think there's whole ecosystems of, people on the web who are looking for the right business to buy, and they're looking for the perfect one, and it doesn't exist.
Correct.
And so now putting yourself in the shoes of a seller, having gone through the process, what advice would you give to a seller who's, going through the process and looking for the right buyer?
I would say talk to somebody like yourself. Figure out what buyers are looking for. Like, where are the multiple levers that you can pull to, what do you have to have buttoned up, right? Like, what are the non-negotiables to sell?
Yeah.
Where are the points that you can extract extra alpha from your business? And it's like some of the things you might say, you know what, I'm good. Like, where's my value now? Cool, I'm good. But you should at least explore that conversation to prepare, because a lot of the things you can do probably within 12 months, So and they're relatively, they're doable. I wouldn't say they're easy, but it's doable.
Yeah,
And they should. And you may say, hey, I'm going to do these 3 things that make sense. Let's do those. And they can go implement that, and boom. It's like, once you have the bones there, that's cool. You can always implement and tweak things and build it.
I'm getting ready to write an article. I'm pretty excited about it, but just is all coming from experience that if you're looking to exit at some point in time, whether it's a year or 5 years, consider reinvesting in your business, because the examples that I've seen, the sellers that invest in their business or reinvest in it, the ROI is off the charts. They're just, I think that too many of them see that, like, hey, I have this dollar or whatever unit of profit. If I don't take it out, it's never coming out, as opposed to maybe I sacrifice now taking it out because it's a lifestyle business. A lot of times it's a lifestyle business, right? I'm used to taking out three, four, $500,000 a year, which is a lot of money in the grand scheme of things. Or maybe I can sacrifice and put some money back in on providing a key man policy for, my key manager, or updating my fleet a little bit, or, you know, switching to a right accountant and have my financials audited and cleaned up, and these things. And I just have so many examples of seeing such a massive ROI from that reinvestment, to where I wish more people would get it, because even if they didn't ever hire me to be involved in anything, I would hate to see business owners leave money on the table, especially because most of them only get one shot, right, to sell it.
Yeah.
And so, um, one thing, Kevin, that we talk a lot about on this show, which is kind of near and dear to me, is mentorship. And we have this show I had kind of modeled after the years over Tim Ferriss and Tools of the Titans, and the book that he wrote based on his podcast. And he had so many incredibly successful business owners on there, male and female, from all over the world. And so many of them talk about mentorship. And even the ones that I've had on my show talk about that. Is there any mentors you've had in your life, whether that's an official title or not, and what kind of impact did they have on you and your progress and success so far?
Yeah, I don't have like a formal mentor. I would say there's people that I follow, like on social media. Like, good example, like two things that I saw that actually got me over the hump, to an earlier point. Like, you're not quite there yet mentally. It took me probably 5 years to get there. And the point I mentioned earlier, Gary Vee, I think I stole it from him. He was like, if you're like 85 years old and you look back, like, are you going to regret this? If the answer is yes, you should probably do it. And he also talks about, like, if you're 40 or 50, you have so much time left. So like, if you want to do this, you want to get into entrepreneurship, just do it. It doesn't matter if you start now. I think Warren Buffett started when he was like 40 or 50 or something like that, if I'm not mistaken.
Yeah.
The other one, Alex Hormozi, love him. Layla, follow them on social media. But he also made a comment that he said, like, if you feel like you're in a cage and like you just need to get out of it, like, you should probably do something else. And I saw that, and I just like sat there for like 15 minutes, and I'm like, I'm in a cage. Like, I have to do this. And like, that was literally the point, led up to it, from Gary Vee and then from him. And that may sound corny, just following people on social media, but like, those were huge words. And I follow a lot of stuff. I actually do some consulting with Hormozi's group at acquisition.com, and it's like game-changing stuff.
Really?
That's been huge. So it's not like a formal mentorship, but I just follow people that, I think I align with their thought process, and just try to surround myself with those smart people and follow, listen to what they have to say. I don't always agree with everything, but that's helpful.
So with Hormozi, I'm a big fan myself, and I love the way, I think we were talking about this earlier, how he's able to just simplify things down. There's no BS with him. He'll just say things in the least amount of words possible, and it's crystal clear, the point that he's trying to make. And I love that about him. What was it about his advice or his guidance to you that you think was the most helpful?
It was a handful of things. So, I mean, I went out to Vegas with a group, this huge group of people, and I actually got a microphone and asked them a question. And I was considering closing down construction. I was just getting stressed out and going with service. And I asked him that question: should I like grow both or shut it down? And he was like, "What do you think I would say?" And I'm like, I don't know. That's why I'm asking the question. And he's like, "You should shut down construction. Cash flow sucks. Liability sucks. Like, you'd be surprised at how fast you can grow on the other piece." And he's like, straight up, like, your plumbing company is not going to be crazy different from any plumbing company. He's like, get rid of that, focus on that. And his theme is like, focus on the constraints. What's your biggest constraint? Get rid of that. So I'm working on doing that, and then I've gone back once. I'm going to go back again. Um, Another piece was I identified my constraint after that as marketing. Like, hey, I can get plumbers. I just need more work, and if I have more calls coming in, like we'll continue to
Yeah.
grow.
Yeah.
So we looked at my marketing agency and they were like, get a new marketing agency. They don't tell you who, they don't provide vendors. It's like find a marketing agency that specifically specializes in plumbing. Did that, total game changer. KPIs, as we were talking about
Really?
before, huge night and day difference. ROI, like it's really expanded my business and it's very specifically geared towards plumbing. Cool. Did that. Focus, like where should you focus the marketing on in addition to that? Like focus on one channel. Don't be like Google, Instagram, YouTube, this like cool, all those things could work, but it's like maximize the hell out of the value out of one thing. And then once you cap that, then go do something else. Also, what I just did recently, as of Tuesday, I hired a business development person, B2B sales, to get into commercial plumbing, which is a big move because it's expensive.
Yeah.
What they would say is you want someone batteries included, like they have the contacts, they have the
Yeah.
experience, they're like
Yeah.
an alpha. They're just a doer, they're go getter. So that's been working out so far. I think we got 15 new deals in 2 days already. So simplistic things, but just really hyper specifically focused on stuff that works that actually moves the needle. Um, Another thing was, I saw him say like, hey, you might want to go change something. And as entrepreneurs, like you're always constantly wanting to change things. And this was enlightening recently where he's like, now before I make a decision, I'm like, hey, what's the growth going to happen out of this? Like, is it 40%? Is it 5%? Because if you're going to change something massive and you're going to have like a 25% dip in revenue to get to that change, the upside must be exponentially greater than that for it to make sense. And that's been huge too, as I'm like, just focus on the stuff that matters. That doesn't make sense to do, even though you might think it might be better or easier. It's not really going to change the business. So things like that, you just really, as you said, super simplistic things that are kind of common sense, but kind of coming from him. Just pointing those out is like very
I'm
enlightening.
honestly amazed that he could give such incredible guidance for a specific business like yours. Like that he could be a generalist in nature, right? Because he does a lot of different stuff. Originally, he was a gym guy, right? And now he's got this school thing. Like, um, I think that's so amazing and just goes to show that, honestly, I think validates how smart he is. Like, don't let the nasal strip fool you or,
No, it's super
whatever he's
smart. I
got
think he
going
just
on.
knows business and he sees a ton of businesses with the business model
And
that he
he's
has
failed.
now. Oh, he's
And
failed many
he'll
times.
tell you, like, and he's got the scars to prove it.
Yeah. So I think,
Yeah.
yeah, I think it's just battle tested, seeing a bunch of different businesses, things that work, and I think there's just a lot of commonalities that transfer over across
Yeah. Sure.
businesses, regardless of the type of business.
There might be certain specific things about your business, but there's definitely, broad strokes, concepts that like he seems to have he's got it figured out.
And I think
So
that's helpful because it's easy to get caught in the weeds, stuck in the day
yeah,
to day, and
100%.
you gotta pull yourself out. And it's like,
Especially when you have that, like,
yeah, it's like
you have those clients.
yeah, what really matters here? Why are we like, let's focus on this for the next 3 months, and stop having meetings every week about everything. Like do this because that's going to move the needle. Let's get that right, and then once that's done, do something else. So that's been tremendous for me.
That sounds like a great mentor to me, even if he's not like
Yeah,
your
like he doesn't
buddy.
know me. I
Yeah,
spoke to him once. It was cool, but like it's somebody I listen to.
yeah, for sure. Um, just delving more into the personal stuff. What do you like to do with your free time? Like, what is your when you're not a Kyle? I know you're a big gym guy. I think I remember. Seem to
Yep.
have a lot of those on this show, but
Yeah, no, I like to stay healthy. My fiance's got a gym background too, so we try to stay healthy. I don't work out as hard as I used to, but I think that's just a huge, like a mental thing for me to be able to work out and just be healthy, whether it's riding a bike, going to the gym. So that, otherwise, hanging out with my daughter, my fiance, and just the business. Uh, those are the main things that I like. I've kind of stripped out the other
yeah,
things, but family, business, health and wealth kind of thing. The business sucks up a lot of time, but
yeah,
I also
sure,
enjoy working.
yeah,
So to me, that's not a negative. To my fiance, that's not a negative. She actually works with me now.
Oh, does she?
Yeah.
Congratulations on getting engaged, by the way.
Thanks.
Social media tells me this, and I'm happy for you.
Thank you. Yeah, so that's cool too. That's actually working out very well. She's got operational marketing sales skill sets that
Oh, yeah.
I don't really have, and it just seems to be working well. And somebody that I trust in the business that cares about the success of it is
Sure.
huge.
I would think your daughter would be a sales manager at this point, but
At 3, it's a little soon. She'll probably kill it though.
yeah. If you get the bossiness down, then you might have it.
Oh, she's got the bossiness down for sure.
Yeah. Right. I had one of those. I have one of those too. She's 16 now, but still got the sass when she needs it. But it'll serve them well in life.
Yeah,
This is what we want as dads, right? One of the questions I love to do on this show is if you had a billboard and it could say whatever you want, what would it say?
Like a personal billboard or for business?
Whatever you want. It's your mantra, your credo, the message you want to get out in the world.
My mantra, and my GM will tell you this: life is short, live it on your own terms. And that's kind of why I bought a business. You know, you get stuck in red tape, corporate world, listening to other people, having to, maybe you don't have a voice and you have to just follow the leader. And if it doesn't make sense, it doesn't make sense. Not to say working for somebody's bad, but you should be relatively happy. Everything, whether you're doing it on your own or working for somebody, has its negatives, but like, you should genuinely enjoy what you're doing. I don't think you have to have passion for it, but you should like be happy. Like you have live your life, put some effort into it.
So life is short, live it on your own terms.
Yep.
You feel like you're not in the cage anymore?
I'm not in a cage.
Yeah.
I am the cage.
That's a great thing. I love that. And so closeout, as you know, we're a Rebel Motor Company, which we've got a lot of amazing vehicles here. Rebel, although they store cars, they resto mod cars too. They make dream cars. So if they're making one for you right now, what is it?
Dream car? I don't know. I did a extreme car experience recently. Drove a Porsche, a Lambo, and a Ferrari, and I love the Ferrari. But, if they were going to mod something for me, I mean, I don't know. The Ferrari was just great. It's like best of all worlds as far as fast, smooth. Probably something dope like that, like Ferrari.
You're a supercar kind of guy?
Now I am.
Yeah.
After driving those, it's addicting.
I don't blame you. Kevin, thanks for being on Like a Champion. It's great to have you. Great story. I think that you executed this in incredible fashion, and you learned a lot along the way, and it seems like you're well on your way to making Kyle into a real force in the world of plumbing.
Yeah, man. Thanks for having me. I appreciate the friendship that we've built.
Yeah.
I think it's probably, I don't know if this is rare to have a relationship after you were representing the seller, but we hit it off from the beginning. So I appreciate our friendship as it continues to grow, and thanks for having me.
You were a pleasure to deal with and continue to be, a friend. Appreciate it.
Thanks, brother. Was that good?
Proper clap.
Nice. That was fun.